Welcome to the Lancashire Business Stories. I'm your host, Paul Lim, and this week we're joined by Rachel Gill, the owner and founder of Aspect Mortgages. As per usual on the podcast, we'll talk about Rachel's early years before she got into business ownership, and after a little bit of encouragement from her husband and a business planning course, how she started the business which has now become Aspect Mortgages. We'll listen to Rachel talking about some of the challenges she had in the early days of the business and growing the business, and also how she came through COVID and has started to expand the business by niching down into certain specific areas of mortgage services. If this is your first time listening to the podcast, then please hit the subscribe and like buttons. It'd really mean a lot to us. Let's get to it. Rachel Gill, welcome to Lancashire Business Stories.
Thank you very much for having me.
It's our pleasure. We're going to talk a little bit about the business that you own now and what you do for people. But as always on Lancashire Business Stories, we would like to start off by getting a little bit of the backstory to Rachel Gill and your career and how you went from starting out with a job to owning a business. So tell us a little bit about you.
So I started working when I was 16 in a shoe shop, and I had various part-time jobs right up until being 18. My first job in financial services was actually when I was 19, so I started working for Newcastle Building Society.
And what was your first job there?
It was a really quiet. It was a really quiet job. I'd finished university. I didn't particularly know what I was going to do with myself.
What did you do at uni?
So I did marketing and public relations.
All right.
At uni.
And did you have a vision about what you wanted to do when you were doing that degree, or was it just the...
I knew from being 16 that I wanted to set up a business.
Really?
But I just didn't know what in. They started training me to be a mortgage advisor. And then I started working with the mortgage brokers that introduced the business in.
Yeah.
Then I went on to work in an estate agent's in Preston.
Right. Where they had a mortgage broker working within the estate agents.
Yeah.
Right,
Yeah,
okay.
Yeah, so I worked there for a little while, and from there I went on to a bank. Well, it was a building society. It became the bank, was the Woolwich.
Yeah.
And from there I went to work in a mortgage broker's in Penwitham near Preston. And I worked there for a few years before...
Doing basically the same job.
And then when I worked in Penwitham for a small company called Darlington Gow, it's not there anymore.
Right.
But Darlington and Co is still there.
Right.
And they were the attached accountancy practice.
Yeah.
And I still go on their staff Christmas dues. And I left 21 years ago.
Wow. Blimey. Just for 1 minute before we go on, there's something that intrigues me. How did you know at 16 that you wanted to start a business? What was it that sort of drove you to want to start your own business when you were 16?
I've no idea, because my parents at the time, they didn't run their own businesses.
Yeah.
And I don't remember knowing anybody really that ran their own business. At the time, maybe it was the influence of a friend from school and being at their house and their parents, but I don't remember anything specific as to why I wanted to run my own business. I kind of fell into the being a mortgage broker. And it was only when they asked me to become a partner at the mortgage brokers, and I went on a course run by Preston Business Venture back in the day. And this chap, who sadly has passed away now, called Gill, showed us how to, like, I just revisited, I'd done business studies at college, and I revisited doing a business plan, doing cash flow projection and all of that.
Yeah.
And he asked us to do it if we could, on the current business that we're in. So I did it on the current business that I was working in. And he looked at it and he said, "Rachel, why aren't you setting up on your own?" And I went home and spoke to my husband and said, "Guess what this guy said? He said set up on your own. That's a crazy idea." And he said, "I think that's a great idea. Why don't you do that?"
I mean, most people when they're 16
they've got absolutely no idea what they want to do later on in life.
No.
And I'd always encourage people to try lots and lots of different things. But the traditional family and education system is always sort of go and get a good education and go and get yourself a decent job. It's never go and get a good education and set yourself a business up. And there's a UK registered charity called the Yes Foundation, which stands for Young Entrepreneur Smart Start. And we're educating young people from 12 to 22 on how to become a business owner, basically, how to think like an entrepreneur, how to think like a business owner and go through all the different things that you need to do in order to become a business owner. Just to get people thinking a little bit differently, because you might not want to start a business when you're 16 or 17, but at least you've got a little bit of knowledge about it then. And if you're going to work for somebody else, who would you rather have? Would you rather have a 16 or 17-year-old who knows nothing about business, or somebody who understands how a business works and wants to do more? I know which one I'd rather have.
Yeah. So if they're going to go on to be like my son wants to be an accountant, so that would have really benefited him in knowing about businesses. We spend all our time at the dinner table talking about work, so I'm sure he's sick to death hearing it, but an insight like that would have been...
So you became a partner did you become a partner in a mortgage brokerage or a partner in a estate agents?
So I didn't become a partner because I did the business plan and I did the cash flow projections, and that business was in 3 parts, and I separated the cash flow projection into 3 parts, and then from there built my ideas on what I'd want to do with that business.
Right.
So I did consider becoming a partner, but then when I gave the business plan to the chap who I would have been in partnership with, it just sat on his desk. And after 12 weeks of him just not opening it, I thought, actually, probably Gill Jones is right, And
there's a sign there.
Yeah, and my husband, who eventually joined me in the business, was encouraging me as well. So I took the plunge and started my own business in 2004.
Wow. So 22 years now? And it's always carried on with the same name and the same...
So we had a period where it was called Cheatham Jackson Mortgages.
Right.
Because we were part of a financial advisors.
Yeah.
But
I've heard that name.
Yeah. So we kind of merged with that, but we kept Aspect Mortgages.
Yeah.
And so we just decided to go back to trading as Aspect.
And was it just you when you started out, or did you have any people working with you?
So my husband supported me in the background.
Yeah.
It was just me for the first 3 years.
Right. How was that, setting out in business on your own and it just being you?
So it was me and the dog. So
You and the dog.
Me and the dog. I am a verbal processor. So having no one to talk to all day was a bit of a problem for me. So poor Richard, my husband, used to come home and I would just download everything. This went on for 3 years.
Yeah.
I did join networking groups. I think it was BNI that I joined at the time. And I loved that. I loved having that support network of the networking group and people that I could call and things. And I was going out and seeing people in their own home. But I didn't have that day-to-day contact. So I took someone on sort of at end of year 3, got serviced offices.
Right. What was it like taking that first person on? What were you feeling?
For me or for her? So for me, I was so inexperienced. I hadn't managed anybody before. I was terrible at it. And for her, until Richard joined, I don't think it wasn't good for her.
Right.
Because I was only in my early 30s at the time. And I think, frankly, I got a bit big for my boots. I thought, well, I'm the business owner, I'm running this. And I wasn't focusing enough on training. I'd got to the point where, you know what it's like when you're running a business, you're doing everything, aren't you? So I was doing everything. And so often she was waiting for me to show her what to do. And then I wasn't really showing her properly in hindsight what to do. I didn't have a plan for taking somebody on teaching them while I was also bringing the work in and doing everything else that I was already doing. I let it get to a kind of crisis point before I took somebody on.
What would you do differently if you had to do that step again?
So it's hard to say in hindsight, isn't it? Because you're a different person. It's 22 years has passed. I'm a completely different person. I've got all that experience under my belt. So I don't really know what I would have done differently at the time, because I was so inexperienced at running a business and so inexperienced at managing staff. I'd never, apart from a brief period where I managed a shoe shop, and it was really just me. I had absolutely no experience, and it was bringing Richard into the business, and he had to teach me how to do that.
The key is that quite often people who start the businesses are incredibly good at what they do. I have no doubt that you were and still are an incredibly good mortgage broker. The skill of being a mortgage broker and the skill of being a business owner and running a business are two completely separate beasts. And the skills, while some of them might be interchangeable, the skill of running a business is multifaceted. You've got to be able to do business planning, as you've already mentioned. You've got to have a clear vision for your business, particularly if staff are involved, because they've got to understand where the business is going. You've got to be great at time management. You've got to be good at customer experience. You've got to be good at finances. You've got to be good at marketing. You've got to be good at sales. You've got to be good at retention and marketing to existing clients. You've got to be good at systemizing the business. You've got to be good with people, at recruitment, at onboarding, at leading and managing, and all that kind of stuff. There are so many different facets to it, and every business owner I speak to is good at some bits of it and not so good at others. But one of the things that fills a lot of people with dread sometimes is taking people on, because either they've been managed really badly in the past and they don't want that to happen again, or they've just no idea how to manage people because they've not been trained. They've no skill at managing people. And it's not a God-given gift. It can be learned. Leadership and management, and the two very separate things, the skills that can be learnt by people. But, you're like a lot of people in the industry that become sort of accidental managers. They're thrust into management positions either because they've started the business and they employ people, or they're promoted. They've been in a team and they're the best person in the team. They're really good at what they do, so they promote them to be a manager. And all of a sudden they give them a job that they've got no idea how to do, which is managing and leading people. Yeah. So, the best solution for that is to go and get some training on how to be a manager and a leader. Particularly if you're one of those team members who aspires to be a manager. Don't wait until you're a manager to get that training. Go off and get yourself some training, or ask your team for training on how to be a manager and a leader. And then when the opportunity comes up, you're a shoo-in for it then, aren't you?
Yeah.
So
I think what I really hadn't appreciated when I started the business was that when I was working for somebody else, I was just doing my day job. So at the time, mortgages were being regulated. They weren't previously regulated. And so they were just in the process of being regulated.
Yeah.
And there were government white papers and consultation meetings with the what's now the FCA, which was the FSA. And I had time to go to all of those. I had time to read all the white papers because I finished at 5:00.
Yeah.
And I was home by 5:15 every single day. So I had time to read white papers, go to consultation meetings, do all this stuff. And what I didn't appreciate is that once you are running a business, you have to do all of the stuff. And I suppose I also didn't see what was going on from my employer behind the scenes. What he had to do, what he had to achieve to make a small mortgage brokers.
Yeah. Yeah, it's interesting, isn't it? Because as an employee, quite often you're not aware of what the management team or your business owner that you work for is doing behind the scenes. And when you start off in business, you're quite right, you have to do it all. I think a lot of people hesitate too long before they start either employing people or outsourcing work, because quite often you'll be doing stuff which is way below your pay grade, and you should sort of really concentrate on the really valuable stuff that you can do. So let's carry on our story. You've employed somebody. Are they still with you, by the way?
No, and unfortunately she has passed away.
Oh,
she
dear.
was called Barbara and she was lovely.
Yeah.
And we unfortunately, when we had the 2008-2009 recession,
Yeah.
we had to make her redundant.
Right.
So we'd taken on our first mortgage broker, we'd taken on offices. Our first mortgage broker, Kay, she lives down south now, I still keep in touch with her. She gave a notice. Then we moved the offices home to our front room. Barbara was working at home with us, and we had to make her redundant, and that was awful. Richard had been working at WH Smith's when a lot of redundancies were happening, and it was something. It wasn't pleasant for him, but it was something that he'd
become hardened to or used to. It's not nice for anybody to either to have to do that, because I've had to do that in the past, or to have to go through that for anybody concerned. But sometimes, in order for other things to survive and thrive, you've got to make difficult decisions, and it's one of the traits of good management, good leadership, being able to make difficult decisions. So we had the slump. What happened then?
So post 2008, 2009, that was a really difficult time for us. We were looking at one point we were looking at 3 live customers on our system, both of us, and we were thinking, it's not going to survive.
Start looking at the job adverts.
And what exactly are we going to do?
Yeah.
And this one customer rang up and said, Rachel, I need you to sort out a load of insurances for us. And it was a lot of work for us. And then the phone started ringing again, and so and everything got better from there.
And we've had a couple of crises in between then, really. What happened during COVID for you?
So initially in COVID, the first 3 months, nobody wanted a mortgage. The valuers couldn't go into a house, so the market just kind of stopped. And again, we thought, right, okay, well, that's that. It's going to go downhill. But then, again, it got busier. We were essential workers, so we did do the first 3 months completely at home with the children, and Richard worked and I didn't work so much, and all the staff were working from home.
How many staff do you have now?
I think at the time there were probably maybe 6 of us. I want to say.
Right.
I want to say there was about 6 of us. So
how many now?
How many now?
Yeah.
So we have 8.
Right.
There are 8 of us.
Great.
But post that period, the applications just went up and up and up.
Right. Did you feel when COVID hit? Did you feel better prepared for it than you did when the slump hit in 2008?
But we only had a very short period of where it was a long period in 2008, really long. It was a few years where things were difficult, whereas it was just a few months. Yeah. And then all of a sudden the applications went through the roof. So at that time there was 14 of us, and everything was really, really busy. And then the year of Liz Truss.
Yeah.
When she opened her mouth, we'd been saying to everybody, it's coming, there's something coming. And we could feel that it was obvious that something was going to happen. But we were sat in a room with 14, there was 14 of us in this room, and everyone was looking at us like, but it's busy. And we were saying, look, we've got recession experience. And sure enough, the phone stopped ringing. And this time we had a plan. First time round, we didn't have a plan, and we nearly came unstuck. This time we had a plan to prioritise preserving the business over everything else, so that the business could give jobs and serve our clients going forward. Yeah. So again, we had to make redundancies. But we did it quicker than we had done the first time because we'd learnt our lessons, and that was awful.
Yeah.
It was on my 50th birthday.
Oh dear.
So, and I was with you at the Business Network. Everyone was singing happy birthday to me. And I knew it at the office we were making people redundant. So it was awful to go through. But as a business owner, I felt fully prepared for it.
Yeah, yeah.
And that's just because of the previous experience. I remember the first time it happened, having a horrible feeling in the pit of my stomach for probably 2 years.
Yeah.
Where I just woke up every day feeling sick to the stomach. Whereas we knew precisely what to do when it happened second time.
Did you use the furlough scheme at all?
During COVID, we used the furlough scheme, yeah.
I think that was a godsend for a lot of people.
Yeah, it really was.
Yeah.
Not so much for directors, but certainly for employees.
Yeah, yeah. Well, let's fast forward a little bit then to the present day, because you've sort of leapt back. I think that boost, sort of as we were coming out of COVID, helped a lot of people in your sector as well, because it just went absolutely bonkers for a little while, didn't it?
Yeah, it did, yeah.
You've got 8 people working for you now. Tell us a little bit more about what you do then, because mortgages covers a whole host of different things. What are Aspect Mortgages' specialist skills, would you say?
So we do mortgages and protection, which is mortgages and related insurances. I'd say that our specialist is the service. So we focus on service. We don't give anybody any targets in the business. Also,
Can you give us a little bit of an insight into something that you might target them on around service then?
So callback times, callback and response times. So if somebody calls into the office with an inquiry, you've got 24 hours to call them, but realistically we'd expect them to be called within 2 hours.
Right.
And I'd say most of the advisors get on top of things quicker than that, because that initial call is the really important one, isn't it?
And how do you measure that?
So we've got systems in place and you log each conversation.
Okay.
So you log it on the CRM. So we've got a CRM called Acre, and everything is logged and monitored. So Richard has oversight of everything and monitors everything.
So you can get a report off of when calls were answered and how quickly they were returned and responded to, that kind of stuff. I think that's really important. Because a lot of people will say they've got great service, but when you say prove it, they've actually no way of actually proving what they're doing or what the KPIs are for the team and what they're actually doing with them.
Yeah. We love measuring stuff. We are aiming for 400 Google reviews, 5-star Google reviews.
How many are you up to now?
I want to say 363.
Cool.
But that might be wrong. But I know
might have gone up since then.
Yeah, we're definitely aiming for the 400 mark. But that in itself brings in lots of work, along with the website. And the thing that I specialise in, so there's 3 of us that are qualified to do equity release, lifetime mortgages.
Right.
So I don't do mainstream mortgages anymore.
And is that a growing market?
Yeah.
Do you think it's because people are less well off than they anticipated when they've got a little bit older and they want to release some of the equity in the house because it's the only thing that they can do?
I'd say that market is changing an awful lot. So whereas it used to be what's called a home reversion, so it's a mortgage for anybody over the age of 55, but people are generally in the 60s, 70s and 80s.
Yeah.
So what you used to do is you would give your house to the lender. The products are really innovative, and you can, say, borrow £20,000 and have a drawdown facility similar to an overdraft.
Yeah.
You can not pay it back, let the interest roll up, or you can choose to pay interest payments. You can usually pay lump sums within a certain limit.
Yeah.
Then after a certain amount of years, you can pay it back in total if you want to. So I think the market is very different. I think it's catering to different needs now. And I think that things like cost of living, so people will be on a fixed pension and they'd budgeted for a life that's now, I think, and people are using it for different things as well.
Yeah.
So people are using it for, I've got 3 distinct different types of clients.
Yeah.
And one of those is lifestyle.
Yeah.
So they might want to buy a caravan or some other luxury, or they might just want a bit of money to put aside. So they've got some money for when things go wrong.
Yeah.
So,
Yeah, I mean, there must be a lot of people now who've got equity in their houses. They're coming up towards retirement, or they've lost their jobs, or they've been made redundant, or taken early retirement, or whatever. They haven't particularly got lots of savings, but they know they've got equity in their house, and their only choices are, I suppose, to sell and to try and downsize, or to try and release some of the equity in it.
So my first conversation with clients is, what else could we do?
Yeah.
Have you spoken to your family about this? Do you want to involve your family? Could you downsize? The last people that I said, could you downsize? They were living in a really nice housing estate. The hedges were cut for them. The grounds were all looked after. They were living in a 4-bed detached house in a really quiet cul-de-sac. And when I talked to them about downsizing, they said, we've already looked, Rachel. We've looked, and every time we go and look at a house that's smaller, it makes us feel really sad. So, so they said, we've considered it, but we don't want to do it. And maybe when we've drawn down some of this money and we decide we don't want a mortgage, maybe we will downsize and pay it off in like 10 years. But in the meantime, we just want to enjoy our lives in this lovely house that you sat in.
Yeah. Interesting. As a business, you offer a multitude of different products, I'm sure. So, and we've talked about your specialisation. Do you have particular markets that you aim at? Are you purely domestic rather than commercial mortgages? Do you do a little bit of both? What else do you?
So when I first started, I specialised in 2 areas. So I specialised in adverse, which is clients with credit problems. And I absolutely loved working in that market. They were my favourite types of people to deal with for various reasons. And then also because I started the business and networked, and that's where all my business came from for a very long time, I was working with a lot of other business owners. So, and I really loved working with business owners because I was running a business as well. They felt that I understood them. A lot of business owners, I'd say that probably a high percentage of business owners are ADHD and can be, they need somebody to organise them. And I am brilliant, and everybody in our business is brilliant at organising other people. And that's why they come to us and pay a fee rather than do it themselves, because they want somebody to be organised. And I think as people's lives have got busy and busy and busier over time, they don't feel like they've got the time to organise their mortgage and everything for themselves. So I'd say that each advisor tends to specialise a little bit in their own thing. So we've got an advisor called Sue, and although all the advisors can do a limited company buy-to-lets and buy-to-let mortgages, really that's an area that she really specialises in. I'd say Mark is brilliant with first-time buyers. So they all have
their own little niches.
Yeah, everyone, all of us have our own little niches that we're good at, but we're all good at organising people.
And you mentioned insurance as well. So, do you offer insurance when you're doing like mortgage products, or do you offer insurance outside of doing mortgage products as well?
So because we are primarily a mortgage brokers, we tend to do them with.
Right.
But then I will...
buildings and content insurance and those kind of things.
Yeah, no, we don't do. We used to do buildings and contents, but we don't do it.
Well,
so we recommend somebody to do it. So we'll do life insurance, family income benefit, relevant life, which is something that can be paid via your business rather than... So various insurances that would usually cover the mortgage but can be used to cover other things as well.
Yeah. Okay, brilliant. What's next for Aspect Mortgages then? What's the end game, or what's the long-term plan for the next 5 or 10 years?
So I think we've really cornered the mainstream mortgages market, and we're doing really well with that. We've got a massive client bank. Richard's managed to step back and concentrate on running the business. We've got a couple of admin people that are fantastic. The area that I am concentrating on now is the equity release side. So I'm really keen that we grow as the equity release market grows, that we grow the business and provide that service for our clients. So our client bank is an ageing client bank. 1 in 4 of our clients is over the age of 55. So it's a service that we've been able to offer existing clients, and we want to expand that.
Yeah. And how long do you think you'll keep going with Aspect Mortgages?
So I am 53 now. I think I will be ready to retire at 65.
Right.
And
So another 12 years.
Another 12 years, yeah.
What are you going to do with the business then?
So that is up for discussion at the moment.
Is it?
The truth is we haven't decided.
Right.
So there are all the various options. It's all early and up in the air, but you need to start doing these things well in advance, don't you?
Yeah.
So that's why we're already talking about it, even though it's quite a long way off.
Yeah. I mean, there are so many different things that you can do with the business. You can design it so it works without your input and keep it and make money from it. You can sell it. You know, one way or another, you're going to exit the business. You're either going to exit the business by selling it, and then there are a multitude of different ways of selling your business, of course. And the most important part about that is maximising the value of your business, because it's an asset. It's one of the things that will, as well as your pensions, will help you when into retirement and in later life, when you want to have the life that you've dreamt of, or more of the life that you dreamt of. So there are a multitude of different things. You can sell it to a completely separate entity. You can sell it to your management team. You can sell it to the staff. You can sell it to your children. There are all sorts of different things that you can do with the business, of course. So, but the most important thing is that you do start talking about it and planning it now, because the steps that you take now are important if you've got an end goal in mind.
Of course.
And in terms of how you maximise the value of the business, that's also important. So it's interesting. What would you say are your biggest challenges right now as a business owner?
I'd say the volatility of the markets. With everything going on in the world, obviously that's impacted interest rates, which in turn will have an effect on buyer confidence. We're not seeing that just yet. Everything is very busy for us still, but we are expecting an impact and bracing for an impact there. It depends how, I think, the various wars, and oil prices and interest and everything. So we're kind of bracing ourselves for that at the moment.
Well, we did a workshop recently with business owners about how to build a resilient business. One and for a lot of people, they think resilience is being able to bounce back. But for me, resilience is about being able to bounce forward, being prepared, and really striving forwards in times of difficulty rather than sort of battening down the hatches. And sometimes that's part of it, of course. Do you have any plans in place? Because you said the second time around you had a plan for when things got tough. So have you thought about what to do differently because of the volatility in the market?
So I think we've already done some of the what to do differently. We used to employ all of our advisors. Now our advisors are mostly self-employed, and we plan only to take on self-employed advisors in the future. So that protects the
core of the business.
The core of the business to an extent. And it was a very different way, because until 3 years ago we'd employed everybody. So it's been a learning curve for those people in the business.
Is there much in terms of M&A activity within the mortgage broker market? Do you get companies buying other companies? Is there much sort of buying and selling of mortgage brokers and insurance brokers?
I actually don't know the answer to that. I think I get so focused on what we're doing that I don't know of any others that have been bought and sold.
Interesting. Especially when you're talking about what to do with your business in a few years' time. Might be something to explore.
Yeah, definitely.
Right, let's have a few quick fire questions to end then. If you could give your younger self some advice, maybe just before you went into business, or for anybody of a younger age who's maybe thinking about starting their own business, what would be the one best piece of advice that you could offer to yourself before you went into business, or to other young people who are thinking about going into business?
I'd say those first 3 years are tough. So the first 3 years especially if you've come from an employed background, I'd only been employed before, and I didn't really know anybody who was self-employed. And I'd go to networking, but I wouldn't go to any socials, because I thought and then it dawned on me after the first year, and I started doing the more social. A lot of
business is built on relationships.
Exactly, yeah. And I don't think I understood that when I first started. I found the up and down, the fluctuations in business, where it's feast or famine quite often, and especially with mortgages. So those down times, try and relax and take some time off, because busy times are coming. And with mortgages, you're either rushed off your feet and working 60 hours a week, or it's really, really quiet. I think in the first 3 years specifically, I think it's really hard to relax when the work isn't coming in, because you don't understand the fluctuations and how they work. It was only when I got through the first 3 years that I learned to relax when it wasn't busy.
And it is a challenge. And I think the thing is, when you first go into business, you're really enthusiastic about it, and you want to work as much as you can, as hard as you can, to make it a success. It's not really as big a challenge in the first 2 or 3 years for people to work the extra hours. The biggest challenge, I think, is not knowing everything that they need to know in order to be able to do it. So, get as much help and support as you can from other people around you. I think would be my biggest advice for people. What about business owners who are out there now? You've had 20 odd years running your own business now. What would you say is likely to be their biggest challenge, that's been your biggest challenge over the years, if you disregard the volatility of the market that we've already talked about? And what would be your best piece of advice for them?
I would say delegate, but also surround yourself by people that know more than you. And I've tried to do that throughout my career, and I think with a lot of success.
It's a challenge for most business owners, because most business owners go into it thinking that they know more than everybody else, and nobody can do it better than they can. So to let go of your baby sometimes can be hard. How do people find out about Aspect Mortgages?
So we are based in Chorley, although we work nationwide. And I think if you're looking for a mortgage advisor for remortgaging or buying your first house, or even your second or third home, a lot of that is done over the phone now. When I first started, I saw everybody, but most people are too busy now to come in person. We do have offices if you want to see someone in person, where you've got things like mobility issues, and advisors can come out and see you. And our website is aspectmortgages.co.uk.
Okay, and are you prevalent on any social platforms?
So LinkedIn, Facebook, a little bit of Instagram, but I'd say mostly LinkedIn.
And are you just on LinkedIn with your name?
So it's both me, Rachel Gill,
Yeah.
and Aspect Mortgages.
Aspect Mortgages
has
have got a
its-
page on
has
LinkedIn
its own
as well.
page as well.
We'll put all those links into the show notes
Thank you.
as well, so people can get in contact with you. Rachel, it's been an absolute pleasure talking to you.
Thank you so much for having me.